This is Eric Muathe, themuathe.com, after the close January 12th, 2009. So we've had a week and a half of trading in the new year. Markets are down. Pretty much all asset classes, gold, oil, and the major averages. And what's really interesting is it's really, from our vantage point, it's been a pretty easy market to call. It's been all the way down, and pretty much pegged it almost day to day. Now, going into Tuesday, I really don't know what we are setting up for, down or up. It really doesn't matter, but the general trend remains down. And one thing I can look at is one of the reasons why the market was down today is because this is the Nasdaq 1-year daily. We see we broke this upward trend line. Everybody saw that. I think we all saw that. All of us who look at charts, that was a sell signal right there. Reason to get out of the market. But the main reason why we were down is because we moved below 50. The daily RSI moved below 50 today, and every time we get a move below or above 50, we get a big swing in the direction of the move. We also saw that on the hourly chart. This is a Dow 60-minute hourly chart. On the hourly chart, again, you see this break of this triangle here. That was a sell signal since the last hour on Friday. Classic sell signal right there. And then we also see that the RSI support broke late on Friday, and the reason why we were down today. So the reasons were there even after Friday's downward action. If you look at the 30-minute chart on the Nasdaq, and I did post this on my blog, is early on in the day the market was finding support here on the 30-minute chart, and it's only probably 2-3 hours to go in the day that the market broke that support, and we had an acceleration to the downside. It wasn't a pretty day if you are long. Now, if we take a look at what most people have been playing gold, especially in 2008, as a hedge for a downward market, that thesis has not been very successful. And we see gold today breaking this upward trending channel here. So that's a fresh sell signal. The momentum is not there. Now it can build a base around here because the 50-day moving average is headed higher. So I would be open to see gold forming a base around here. But if we go by what we see, that's a break. There's really no reason to be long gold at this point, because that's a severe break. And also we see that the RSI is giving us a fresh break signal, fresh sell signal for gold. The RSI support has broken. I would not be holding gold. It really doesn't matter what people say as a hedge. That strategy is not, the market doesn't seem to like that strategy. And until we break out in gold, if we can move above this downward sloping line on gold, the moment in the future we move above that, then probably we might want to go long gold. For now, there is really no reason. Now, this is a 10-year monthly chart for gold. Now, if we take this move from 2001 to early 2008, from around 250 to 1000, the 38.2 retracement for gold is around 555. And I would not be surprised in 2009 if we see gold trading at 555 before we see it trading at 1000. So we still remain in this huge long-term channel here, but until we see ourselves break out of this top lines here, if we move above that, then we can play gold. But because gold has been stalling on these top lines here, I would say pretty much that would be what we are looking at right now, given the charts. And I would not be surprised if it goes back to test this lows here around 555, or even the 50% retracement of this decade-long move from 2001 all the way to 2008. So that move, 50% retracement, is around 650 on gold, and the 38.2% retracement is at 550 in that region. And I will not be surprised to see it trading either here or here in 2009. Now, we were lucky to have gone long this the double short gold DZZ. We went long this instrument, I think last week, around $26. Had a huge move today, so it's it's really pretty much been a decent market for us so far in early part of 2009. Decent being a humble term, but it's been a great 2009. You know what I mean? We take a look at FAZ, financial bear, 3 times bear. Huge move today, up 15, was up about more than 19% today, and we close above 50. Like I said, a pullback tomorrow might be huge because it's going to bring it back below 50, and I don't know how that, so I'm neutral going into tomorrow. Don't know how it's going to turn out. Either way, it's going to be a huge day. We see that we pushed above these levels in the last 2 hours of the trading day, right there on the price. So that was another buying opportunity. But I also see that the RSI on the hourly a little bit extended. You might see a small pullback. We take a look at BGZ, which is a triple times large cap bear ETF. It closed just below 50 on the daily RSI. So we might get another continuation rally tomorrow. That's why I say I don't know that it's going to be up or down. Seems to be a huge day tomorrow, Tuesday, coming up. Or we might get both. Early move in the morning in one direction and a reversal move sometime tomorrow. I really don't know. Don't forget we have options expiration, which throws another just confusing scenario this week. So don't be too sure. Play stops, take profits. So if we get a move tomorrow that takes this instrument with a close above 50 on the daily, that's going to guarantee bears a huge day, yet another day. Now, many people have been running to the biotech space because of the JP Morgan Biotech conference, and also because there've been a lot of mergers in this space. BBH is a biotech ETF. Holding was only down about 25 cents today or whatever, 0.16% for the day, which is a good performance given the market was down huge. But you see it's forming some kind of a double top on the RSI. Not the kind of best bearish, not kind of the best bullish environment for an instrument to be doing this kind of a double top on sentiments, which tells me we might see a break of this triangle right here, and another reason for the market to be down. Also, if you take a look at the UYM, which is a ProShares basic materials, we are right. We've been struggling to move above this price channel top lines, which is bearish. I had a big down day today, and also clipping back below the 50 level area, and not forgetting the RSI, the red line. We are breaking below that line right there. So that's newfound bearish sell signal for this ultra long basic materials. Basically, the market doesn't look very hot, but I'm also open for some kind of strength for the bulls mid this week. I don't know, but I still lean net short, but I'm also open to see the bears takes profit. So not convinced one way or the other, but if I was to make a bet, if you make a mistake in this market, make a mistake going short. This is Eric Mwale with Mother.com. Peace and blessings to you.